Not your parents' tax terms. Hello, and welcome to Not Your Parents' Tax Terms. The Not Your Family's Workshop series is brought to you by AmeriCorps and the Cincinnati Public Allies. To learn more, visit nyfworkshops.com/about. Hello, I am Raven Nelson. I will be leading this series. I am a tax accountant with 5 years of experience preparing individual, corporation, and not for profit tax returns. I'm currently working as a payroll tax specialist for a company, and my goal is to become an enrolled agent through the IRS by the end of 2020. Who's taking my money? Let's start with why we pay taxes. What are taxes? It's money that citizens are required to pay to maintain and finance the cost of their government. Every wage earner, consumer, investor, and saver in the U.S. has a legal obligation to pay taxes to his or her federal, state, and local governments. Approximately one third of each dollar you earn goes to pay taxes. Our tax system. Money is collected by the government from citizens and businesses in the form of taxes. That revenue is redistributed or spent according to the needs and priorities determined by Congress. The largest source of revenue for the government is personal income taxes. Other forms of revenue include borrowing to cover the deficit, Social Security, corporate, excise, customs, estate, gifts, and other taxes. So, what kinds of things do my taxes pay for? On a local level, your taxes will pay for things like education, parks and recreation, streets and roads, police and fire. On a national level, your taxes will pay for things like national defense, national parks, highways and major infrastructure, welfare, and foreign aid. Types of taxes. There are four different types of taxes. You have taxes on purchases, which include a sales tax and an excise tax, which is regressive. Taxes on property, like real estate, property, or proportional and personal property tax. Taxes on wealth, such as federal estate tax and state inheritance tax, which is progressive, and taxes on earnings, which is income and social security taxes, which are also progressive. So, federal taxes is money from the government of a country used for the growth and upkeep of a country. Some people think of it as rent to use the resources provided by a country. State is a direct tax levied by a state on your income that was earned in that state. State income tax is self assessed, which means taxpayers file required state tax returns. And local is a tax levied by a local authority, such as a county or municipality. A tax that is usually collected in the form of property taxes and funds a wide range of civic duties such as garbage collection and sewer maintenance. So let's look at a moment in history on taxes. There's often anxiety surrounded with filing your taxes for many due to the lack of knowledge. You pay these taxes, but you're not sure why and you don't see where the money is going. Well, in 1861, taxes were first introduced by Abraham Lincoln to help with the Union War Fund. After the Civil War, the income tax did not gain much support. In 1894, Congress passed the Wilson-Groman tariff, which was an income tax at the rate of 2% for income over $4,000, but it was overturned by the Supreme Court in 1895. And in the earliest 20th century, the income tax received renewed support, and in February of 1913, the 16th Amendment was ratified to the Constitution, thus granting Congress the power to collect taxes on personal income. Important vocabulary. Let's define the tax form words. Tax terms. Tax deductions. A tax deduction is a deduction that lowers a person's tax liability by lowering their taxable income. Deductions are typically expenses that the taxpayer incurs during the year that can be applied against or subtracted from his gross income in order to figure out how much tax is actually owed. Generalized deductions versus itemized returns. What is the standard deduction versus an itemized deduction? You can claim the standard deduction or itemized deductions to lower your taxable income. The standard deduction lowers your income by one fixed amount. On the other hand, itemized deductions are made up of a list of eligible expenses. Charitable contributions, also known as charitable donations, are gifts in the form of money or property that is donated to a qualified charity or organization that has reached the 501c3 tax status. These are usually things like educational institutions, religious organizations, or government entities. Dependent. This is a person who meets the five tests of dependency and thereby qualifies to be claimed as a dependent for tax purposes. Head of household is a filing status used by an unmarried taxpayer who pays over half the cost of maintaining the home of a qualified individual. Exemption is a reduction of income that would otherwise be taxed. The Internal Revenue Service is the Treasury Department division responsible for collecting taxes. Permanent and total disability. A disability that is expected to last at least a year and keeps the individual from any gainful activity. Self employed is a person who individually decides when and where to work to pay his or her own expenses. Self employed individuals must pay self employment taxes. Annuity is an annual payment, such as from a retirement plan. Employment expenses are ordinary and necessary expenses to perform the duties for which an employee was hired. Standard deduction is a predetermined amount of income that is not subject to taxes and is claimed when an individual does not itemize deductions. Interest is the money gained from investments such as bank accounts, bonds, or trusts. Interest is unearned income. Alimony is regular payments made to an ex-spouse or to a legally separated spouse. Alimony is considered income for the payee and is tax deductible for the payer. Allowances is a number on your Form W-4 used by your employer to calculate how much tax to withhold from your paycheck. The greater number of allowances, the less income tax will be withheld. Depreciation is a deduction taken for the business use of certain items which lose value over time, such as office furniture. An extension is a tax extension obtained by filing or e-filing Form 4868, which will delay your filing deadline by 3 months. Note that this extends your time to file, but not your time to pay, and interest and penalties may apply to any late tax payment. ITIN is an individual taxpayer identification number, a number used to identify foreign taxpayers to the IRS. Only taxpayers who do not have a social security number must obtain an ITIN. So give us your feedback. We hope this video was informative and helpful. Please make sure to complete an evaluation survey at nyfworkshops.com/evaluation. These evaluations will help us determine if this video series should continue and how we can improve the content of future workshops. Participants who complete at least 3 evaluations by May 22nd, 2020 will be entered into a raffle to win a $25 gift card. Thank you. Thanks for watching our video. If you're looking to learn more life skills, check out the rest of our videos and please send any questions to nyfworkshops@gmail.com. Special thanks to the following individuals and organizations for providing the information and resources to make this video.